Hello and welcome to this video on income from other sources. Now, what kind of incomes would you expect to see out here? Obviously, the incomes that don't belong to any other head, which are not from employer-employee relationship, which are not because of business or profession, which are not because of a rental income or capital gain. So, technically, any other income will come over here, but main kinds of incomes which form a part of this group, let's look at them. Well, return on investment in the form of dividends and interest. This is one of the key components of income from other sources. Talking about dividend, you might be inclined to say that dividend is exempt from tax, but it is not necessary that all dividend is exempt from tax. So, dividend would be exempt if it is received from an Indian company. Remember, dividend received from a foreign company which is not listed in India is completely taxable. For example, if you have stocks of Apple or of Coca-Cola which are listed in USA, then any dividend that you receive from those companies will be completely taxable. DDT is paid. What does DDT stand for? Dividend distribution tax. This tax is something that company has to pay to you before they go out to distribute the dividend. And the dividend has to be distributed from free reserves or the profits of the companies. Dividend can't be distributed by selling of assets. Can't be means you can do that, but it will not be exempt from tax. Talking about interest, interest is generally fully taxable unless it's a specified security, like for example interest in employee provident fund and public provident fund is exempt. Otherwise it is generally taxable. However, if ever any expenses are incurred relating to earning of interest, directly related to earning of interest, such expenses are allowed as to be charged as deduction. Second, income earned through speculative things. Now, what does speculative income mean? Income which you have got because of a lottery, paper puzzles, game shows, etc. Any reality show is a part of this, any paper puzzle is a part of this. Even though technically you may actually require skills, talent, knowledge to win a paper puzzle or a game show or a reality show. Horse races, another example, and the reason why I have distinguished is for the earlier part there is an exemption up to rupees 10,000, whereas for horse races the exemption is only up to rupees 5,000. So what happens if you win a lottery or you win rupees more than 10,000 in a game? Entire money is taxable. This is not slab wise. And at what rate? Flat 30% tax rate. You don't have any slabs, no deductions. So even if rupees 11,000 is the only income in the entire year, that 11,000 will have 30% taxation. Try to connect it in this way, that if somebody is to win 5 crore rupees in a KBC contest, they will only be able to keep 3.5 crores with them. 1.5 crores will go away as taxes. Now, if that has not really made you happy, your money going away to the government, let us look at this gift part. This generally makes people happy. Well, if you are going to receive a gift which is going to be up to rupees 50,000 or less than that, then it is going to be exempt for you irrespective of who has given you the gift. However, if the value exceeds 50,000, maybe from one gift or maybe from multiple gifts, then full value will become taxable. For example, if you have received 3 gifts, each worth 20,000, so total worth of gifts that you have received in the year are 60,000. So all 60,000 rupees will be becoming fully taxable. They will be added on to your income to determine their status. Unlike speculative income, where there is a straight 30% slab. There are certain instances where gift will always be free from any tax, even if it is above 50,000. Now these instances, let's have a closer look at them. First, if any gift has been inherited or received by a will, or a gift which is received on occasion of one's marriage, or a gift from relatives. Now, what exactly do we mean by the term relative? Who is a relative from tax point of view? Well, any ascendant would be a relative. Ascendant would include parents, grandparents, great grandparents, whosoever are alive. All descendants, children, grandchildren, great grandchildren, whosoever has arrived till now, are also relatives. You can take gifts from all of them if they are willing to give. Siblings of parents, now they won't obviously be your ascendants, but you can take gifts from them. And you can obviously take gifts from your siblings. You can take gifts from your spouse, and you can take gift from similar relatives of your spouse. For example, if you can take gift from your brother or sister, you can take a gift from your spouse's brother or sister. A similar relative on spouse side and spouse of all of these relatives. So you could take a gift from your brother's spouse or your sister's spouse. You could take a gift from your spouse's brother or spouse's sister as well. Another important item is income earned by the way of letting out. Letting out what? First, let's understand that letting out things could be a business as well. If I let out a house property owned by me, the rental income goes as income from house property. If letting out is my business, then income earned by letting out goes as business and profession. But where the letting out of not in business nature, then for example, if plain land is let out on a regular basis to different people for the purpose of marriage ceremonies, then that becomes a business. But if it is let out to one single party without much thought of what that party is doing, then it would be income from other sources. Letting out of machinery and furniture, maybe you have one such piece lying around and you decide to let it out, it will not be treated as it will be treated as income from other sources, not as business and profession. Subletting of house property where the lease does not exceed 12 years tenure. This again would be income from other sources. Family pension. Many a times employees would have pension being received throughout their lifetimes and also after their lifetimes by their uh, family. Now, for the purpose of family pension, the family might include spouse and 2 children below the age of 25. Now, if somebody is in receipt of family pension, will this family pension be considered as income from salary? For something to be called as income from salary, you need to have an employer-employee relationship, and the employee's family did not have that relationship. It was the employee who had. So as long as that employee was receiving pension as his lifetime, it would have been pension under the income had income from salary. Now that family is receiving that pension, it will become family pension. Such family pension will be exempt up to the least of one third of such pension, rupees 15,000 or whatever is actually received. Example: if 30,000 rupees have been received as family pension in the entire year, then one third of that, which is 10,000, will be exempt. If 1 lakh rupees have been received, then 15,000 will be exempt because one third of 1 lakh is 1,33,000, which is not allowed. In family pension, however, there are instances like this where lump sum payment is made on as a compensation on death while a worker was in service. Such an instance is fully exempted. Similarly, if a death of a member of armed force happens in course of operational duties, all family pension being received by such a family would be completely exempt from tax. So these are the key important elements of income from other sources.